Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market analysis update for Zilliqa. We'll talk about this major retest coming back up to the previous range lows, right around 2.8 to 3 cents. We're also going to talk about some key levels of support to watch out for, as well as Zilliqa's performance against Bitcoin by looking at the ZIL Bitcoin Ratio and how this is actually setting up for a pretty nice longer term double bottom, bouncing off the support from back here in February. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. I am fairly active over there with crypto content. So I do want to start off on the weekly chart and really just recap on this level ranging from 2.8 to 3 cents. And we saw this has been a huge level for Zilliqa throughout its entire history. Going back to the previous market cycle, that was the first region of support that we bounced off of back here all the way in 2018. We had that first retest right here in March, and then that led us all the way back up to a pretty significant and sizable bounce. And then we came back down to retest it in the end of 2018 from August all the way up until November, and we saw that hold as support for a few more months, eventually not getting that breakdown until later on in November. And then we flipped that right into resistance several times, this first rejection right here in April of 2019, and then the next rejection in June. And then we also saw this as resistance in June of 2020 as well as August. So this level does have a lot of historical value, being support and resistance over the years. And essentially we're getting that underside retest where we had this as support from back earlier on in 2022. And now we're coming back up to retest that after the breakdown that we saw in November. So this is going to be a very important retest to watch out for because it could really set the fate over the next few months of what we could expect with Zilliqa. And there's really two main scenarios that we can consider here, which is number one, if we have a rejection off of this where we have resistance and supply coming up into the zone where we would expect a continuation of this downtrend and an eventual retest of the range lows ranging from 1.2 to 1.25 cents. And this would really just be the bearish case and the bearish scenario where over the next few months we do have that retest, and then eventually that level is rejected off of, and then we could come back down to target this range low as our longer term support where we might start to see some sort of reversal to this downtrend. And again, that is the more bearish scenario. This certainly doesn't have to happen, but I do think it is one of these scenarios to consider just because we have seen this level act as strong resistance over the years. And the last market cycle, as soon as Zilliqa entered this range and lost that level of support, it wasn't until November of 2020, about 107 weeks later, where we eventually got the breakout back above. So if you're not considering this as a possibility, again, I don't think you're doing yourself any favors. This is certainly a scenario that is within the cards just because of the historical context of this region as resistance and because of the nature of this bear market rally that we've seen. We've seen a pretty remarkable move off these lows, currently up around 75%, which is certainly within the range that we have seen throughout this bear market with the bear market rallies. Now, the other scenario is this isn't a bear market rally, and we actually do have some sort of longer term cycle low in place, which again, I'm not discounting either. There is a possibility that we do actually see a reclaim of this level, to which this longer term region would look like some sort of deviation and a big fake out. And that would come off the back if we have over the next few weeks a reclaim of that zone, again ranging from 2.8 all the way up to 3 cents. And if we can reclaim this level and have a convincing move back above this as support, I would start to say that this is a fake out. This is a longer term cycle low in place, and we would have a pretty nice reclaim to which we might start to target some of these lower highs, such as the lower high in August, right around 4.9 cents. And then from there, just play it level by level. But that's the scenario, and I wouldn't really get bullish until we see that reclaim, because again, this is still resistance until proven otherwise. And there is that downside threat and the possibility that we just see that rejection. So it really all comes down to, in the next few months, how we react and respond to this retest. So on the Zilliqa Bitcoin ratio, we have seen a pretty significant retest as well. We have come back down to retest range lows right around the 100 Satoshi level from back here in February and March. We discussed this over the last few videos, and again, this is strong support. We saw this being the bounce, the pivot point back on that reversal that we had in the beginning of 2022, and this was also previous resistance back in 2019. So we saw that being a historical level as well. And now we're just getting some sort of double bottom with the bounce off that right up into this resistance at these moving averages. So at this point, I would say that if we wouldn't look to this as a longer term double bottom, and if we're trying to see longer term outperformance against Bitcoin, we really need to see a break above these moving averages, the 20-week simple moving average and then the 21-week exponential moving average, which today span from 141 to 143 Satoshis, but they have been averaging down, so do consider that as a moving target. And again, a reclaim would look something like this, where over the next few weeks we can get a convincing move above this and then potentially have these moving averages start to slope back up as support. If we can get this, that would really start to have a more convincing look that we have some evidence of a longer term double bottom, and we might start to see outperformance with respect to Bitcoin. But there is certainly the possibility that we also reject. You can see the weekly candle has this massive wick coming up back above this, but ultimately we're coming back down currently below these moving averages. So watch out for that weekly close to see how we respond to these moving averages. I hope you guys enjoyed the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.